First up, Marianne, is Dick's Sporting Goods. A little bit of a head fake here. Guidance was sort of soggy, but then the company said, well, just wait a minute. We're just kind of predicting the worst case scenario here, and the stock goes up. What do you think?
Well, first of all, they cut their guidance for same-store sales from a midpoint of about 2% to, that is a gain, to now falling, a 2% decline to now falling closer to 5% or so. I do think they are having problems getting the merchandise. I've had an order in since November. I've yet to see that. But I just think that in terms of valuation, it isn't expensive at 7.5 times the midpoint for next year, but we just don't see a catalyst here.
All right, so Wendy's might have more of a catalyst, if depending on a possible sale. Marianne, do you like that stock here?
Well, Tryon is the big owner, and they just restated their intent to put the company up for sale. When, they've been controlling the board for quite some time now. They could only produce a 1% increase in same-store sales in the first quarter and an earnings decline. I just don't see that the stock should be selling at 22 times forward numbers when the rest of the market is closer to 16 times. I just have to ask the question, where's the beef?
Yeah. So that's a pass. Let's move on to Nordstrom, a company that has taken its punches in recent quarters, but put up some much better numbers this time. Where do you see it going?
Well, this is one that's had 17% sales growth, and it's driven by that revenge travel along with revenge special occasions. Everybody's throwing a party now for any reason whatsoever. And also return to the office because people don't want to look like they did in 2019. So we think management is being conservative about the coming quarter. They said sales would only grow at half that rate. It's something we'll have to see if the rest of their assumptions are correct. At less than 7 times earnings per share, we would say don't sell. So it's not a screaming buy recommendation. It does seem more attractive for an LBO. Remember, management was talking about doing that back in the fall of 2020, but we don't own it because we can't time those things. Yeah.
Let's talk a little bit more here. Nordstrom up against Target and Walmart, which are different kinds of stores. I get it. Yeah. Nordstrom's numbers don't really square with the other guys. Why?
No, I think it's because their dependence upon apparel, clothing and shoes and accessories, as opposed to Target, which did such a great job with the at-home things, adding inexpensive furnishings to your place, just, making your place more livable when we were all living at home more. And Nordstrom is really your away from home kind of play. And as I said, people are dressing for more special occasions. These are much higher ticket items than anything that Target could sell right now. I have to say, I was very disappointed with both Target and Kohl's and a couple of other department stores at Easter time because they really didn't have Easter apparel. They just didn't buy it. And I think they just didn't read the consumer very well. We wanted to be out. We wanted to be showing off how cute the kids are. And they just didn't have the right mix, whereas Nordstrom does.